Hey everybody, it's Clinton and Fab here with Team Haig. Today we're being joined with Rob Scaglione of Mortgage Architects. We're going to talk to you a little bit about financing right now during the COVID times.
Hey Rob, how's it going?
Great, guys. Thanks for having me out again.
Yeah, no, it's great for you to join us again.
Yeah.
So we haven't talked to you in a little while here, and some of the things we thought we'd update some people on is probably on their minds is, we have some questions for you that we've been kind of hearing on our end, and then maybe we relay it to you, and we'll see where this goes, and maybe it'll be helpful for people. I think it will be.
Sounds great.
One of the things that's coming up for a lot of people is probably they're concerned about is maybe, can you touch a little bit on, the renewal process for your mortgage? So if you're coming up for renewal.
Yeah, the great questions happening quite a bit now. So a lot of mortgages are up for renewal. It's sort of a common thing that's happening in the mortgage industry. But in the COVID time, and there's a lot of questions that come up of, can people get approved and still approved for renewal? So the question first and foremost works out to be is you should always talk to your financial advisor or a broker, your broker, whoever your representative is, to see where you fit with COVID. And the reason I mention that is because there are a bunch of different things that are happening with renewals. Different lenders are doing different processes, and you want to make sure that when you go in for your renewal, that you don't have any sort of surprises. So it's always good to do that early. Most institutions should be informing you well in advance of your renewal date so that you can ask those questions. If you have not heard from your from your representative, you should probably be searching them out, or, if you want, give me a call and we can sort of help with the process of identifying what maybe some concerns might be in a renewal or how easy it could be just to do your renewal. So,
okay. What if somebody was up for renewal or is coming up soon and they're thinking, I've seen a better rate at a different bank, things like that. How does that process work now with this COVID, or is there any effect on that for switching banks?
well, I guess the institution. So if you're staying with the same institution, you don't need anything new, no new money, no different formats, then it's a simple renewal with that one institution. But if you're starting to look outside of your institution and you want to look at trying to get a better rate, a better program, a better product, or a different product, I should say, not necessarily better, but different, or you want to add more money, and especially during these situations now, people are looking for more money. If you do anything like that, it's now considered a new application. It's not a renewal now. So when you get into a new application, that means you're dealing with new lending rules. And if you're dealing with a new institution, it's the rules that go along with that institution. So now it becomes a full application. So that's where the whole process becomes sort of a little bit of an misunderstanding for people. They still think they're doing a renewal, but if they're going to be dealing with a new institution, it's not really necessarily a renewal. So you have to take a look at it. There are processes where you can move institutions and what we would call in our industry a switch, where you switch from one institution to another, but then there's rules that go along with that switch and what that means in that switch. So again, it's not as simple as, oh, I just want to do a renewal because my mortgage is up for renewal. That really in the simplistic format is when you're renewing with your current institution in the basically not changing anything you currently have.
I see, yeah. One of the things that's come up for us as a team personally is a townhouse complex where they had an issue right now with their insurance for their strata, where the total replacement cost was not renewed in full, meaning they didn't have 100% replacement cost. They had 65%. I know that they're working on that still, but if you're in that sort of position where your strata has come up with something like that and you have to renew or refinance, is that becoming an issue, or is that something you're seeing out there?
It's becoming an issue when it's brought into a new lender. So I can't speak for the renewal specifically because usually on a renewal that won't be a factor because it was already insured prior. But for you're going into a new lender, if you're trying to get to a new institution and buying the property specifically for you guys when you're buying it, that is a problem. Lenders are pretty much saying it's a steadfast no, that they won't touch it if it doesn't have full replacement. But we are seeing some lenders right now, at least on the broker side, which is great. We can market to different lenders. Some lenders have said we will do it by a case-by-case situation. Okay. So it's not a hard no for everybody, but it is something that if your institution says no, you're kind of, you're having to look outside. And so that's one of the things we can do is we can look at different lenders to see who would take that particular property. So unfortunately, for most people, it is a hard no. But there are some institutions right now, or some lenders, I should say, that are being a little more lenient, maybe potentially on that, or might have forgiveness depending on the type of situation it is. So it
And
is a
that,
case by case.
sorry, and so that, I mean, from what you're saying is that has to do specifically with the fact that your business, you're able to shop around at different institutions, and you're seeing that. So you're not at one sort of institution. You're not at one bank.
Correct. Yeah. The policies of that one bank might say, no, we can't take it unless it has 100% insurance. So if you're dealing with that one institution and that's what the answer they give you, you might say, okay, well, I'm done. I can't buy that property, or I can't do anything. With myself, what I'll do is I'll keep on looking for institutions that'll give me potentially a yes.
Right.
And so that's what we're going to be looking. That's the benefit of the broker side. We can market to multiple lenders and see who will give us the yes. It might, in the end, that might still be a no, depending on the circumstance of that particular property, or that insurance or non-insurance or whatnot. But the benefit we do have is we can look at multiple lenders to see who would give us that possible yes.
Okay, good.
All right, right on. One thing too that we get a lot is about pre-approvals. So a lot of times buyers say like, I'm pre-approved, I'm good to go. Is that necessarily the case?
Yeah. We'll talk about pre-approvals. Pre-approvals has got a kind of couple different steps to it. So yes, if they're pre-approved by a lender to say their credit or their income or those particular numbers that they've worked out are all good. The other part of a pre-approval though is the property itself. So just like we explained that whole thing about insurance, you can be pre-approved to go buy something, but then if the property's not insurable or the property's not lendable by the institution, then your pre-approval wasn't very good for that one particular transaction you're trying to complete on. So there is two sides to it. The lenders are going to be looking at you as an individual, your credit worthiness, your income, your ability to cash flow the mortgage. And then there's the secondary piece is the property itself. Is the security for the institution solid? Will the institution take that security as a mortgageable product? So yes, you're pre-approved, but the pre-approval doesn't mean you should go out there with no subjects or whatnot, because there are two parts of that transaction. You might have solved the one or got one kind of committed, but you have not got the other side committed. No institution is going to give you that because they don't know what you're buying yet.
Yeah, no, fair enough. Okay, and then another question we've been getting lately too is, so I may be not working right now because of COVID-19, but I know I'm going to be working in the future.
Yes.
Will I still be able to get a mortgage right now based on not working at the moment?
So again, that's a case-by-case situation. Some lenders are looking at your type of work you're currently in. And if you're unfortunately have been subject to a COVID layoff or whatnot, but are going back to work and you have some documentation that's going to show that you are going back to work, then some lenders might be taking that and actually using your income for qualifications purposes. But it is lender policy. And so it's not a guarantee. And it also depends on the type of work you're doing. So again, depending on what kind of employer you have, lenders are looking at it in reference to the type of work you'd be doing that it's guaranteed to go back to or whatnot. So it could be just a short-term layoff, and the type of work you're going back into will be fully fledged, full income and full operation. So then they're looking at it on a case-by-case situation as well. So there are opportunities for those individuals, but it will be a case-by-case situation.
Okay, awesome, thanks. And then one last thing too, I guess right now, how are you seeing like the activity rate on your end? Is it still fairly busy in the mortgage industry?
Well, I'm noticing a lot of questions, which is great. So a lot of people are asking questions to be prepared. Some people might be getting that information so they can, when they feel comfortable, when they're back off of layoff, for example, are ready to go, or just getting information to figure out what they want to do next. So that's either by listing and seeing what they can do, or by looking to refinance or purchase again. So we are seeing activity. I'm not necessarily seeing it as busy as it was, of course, because there's not as many sales going on. So people aren't changing homes, but we are seeing some activity. The great thing about the mortgage industry is that people always have a renewal. So there's always mortgage business to be had. But again, it's these kind of issues, these kind of questions that we're getting a lot of does temper the mortgage industry. And again, it's one of the things we always have to be cautious of. So again, to answer the question, I guess, is we're doing a lot of advising, which is great. A lot of knowledge inquiries are happening from individuals, which is awesome. And education has always been a big part of what we try to do here. So I'm happy to provide that information for people. So if anyone ever has a question or whatnot, I've welcomed the conversation, of course. And I always think it's great to have the knowledge so that when we come out of the pandemic, we can, hit the road running hard for people to know what they want to do, if they want to buy or refinance or whatnot. So.
Yeah, awesome. Great. And we'll put Rob's information up on the screen so that you guys can reach out to him if you want to.
Yeah, absolutely. That'll always be at the end there. And, you know, just you brought up a question that I thought of as you were speaking there is, you know, we've noticed something in the last few weeks that more people are calling us, people that maybe were planning on listing or were looking to buy then, but have taken a break because they didn't need to buy. Have you noticed a difference in the last week and a half, 2 weeks?
Yeah, I've noticed some people having, like I said, more. I think the conversations are turning a little more to not as loom and gloom, if you want to call it that. Like people worried about what's going on. I see more people, like I said, getting the education to see where they want to go, which is going to be really exciting. So I think that's a positive thing we should take from where we are right now. As I think as the world is changing and for more positivity, I think people in general's attitude are changing, and I think that'll help for all of us, you know, in the industry we're in. So I'm hoping that will change for you guys as well, and you'll see more people do more things. I think we're going to come in out of this with some good activity.
All right. Well, that's it for me, Clinton. I don't know if you have any other questions. Rob, anything else to add? But other than that, I mean, give us a call. We're all here to help you guys if you need anything. And thanks for joining us, Rob.
Yeah, thanks, guys. Appreciate having me, and look forward to talking to you guys again soon.
All right.
Take care.
Take care.